Hello, I would personally like to welcome you all to the AGM of E, X and Y Chips and Boards. As you can see, we have a packed agenda and we can't wait to take you through it and particularly tell you about how we feel we have transformed this company over the last year and a half. It was at the end of period 4 when you, the shareholders, decided to remove the old management team and replace them with us. We have therefore ran this company on behalf of the shareholders from period 5 onwards. As you'll remember, we inherited the company in a pretty bad financial way in terms of a 3.4 million retained deficit at that time. And what we've tried to do is make strategic decisions based on where to sell X and Y, which countries to sell them in, Japan, EU and the US, and where to produce them, to understand the demand need for these products so we can match that with supply, to think about where we want to be innovative and where we want to do R&D or if we want to partner with other companies. And finally, overriding all of this was the leadership decisions that we were having to make for the company. As you can see, we have an excellent, diverse management team that have been running this company for you, and I think that plays a big part in the results that we are going to be able to tell you about over the coming few minutes. We made sure we operated with a flat structure so we could share information quickly and easily and make sure we could all hear the same messages. We wanted to split our markets into our stronger and weaker markets to make sure that we had similar strategies to deal with the markets we were in and make sure that they were heard across our sales, production and R&D decisions. So to our initial strategy. We realised from our initial market research that Japan was going to be a market that had great potential, and therefore that became an early focus for us when setting the strategy. We also realised that due to the COVID environment, there was extremely cheap debt on offer. We therefore chose to use that in order to invest early and build factories which would enable us to have a platform for future growth. We chose to build these factories in various locations in order to share the risk and mitigate that risk. However, Europe and Japan were the two focus markets. In terms of innovation and R&D, we wanted to be at the forefront of the products. This industry is one that is focused on innovation and it constantly moves. However, we wanted to share the risk and the costs of doing that. Therefore, we formed an initial strategic partnership in order to share the R&D and share the risks and costs associated with that. Finally, on production, we wanted to be efficient. However, where we felt the demand was there, we wanted to fully produce in order to maximise our market share. We then took this strategy down to the next level, again by doing further research into each market. And from that came our individual country strategies. In America, we realised that it was cheap to produce, so we could produce both goods. However, Y was going to be a better market there. In Europe, we were going to focus on selling and producing Y, although given the cheap cost of factories, we wanted to produce both there and build some factories. And as previously mentioned, in Japan, we saw this as a key market with great potential and therefore early investment, produce and sell both goods. And so here we show you the results of our first period after enacting our initial strategy. As you can see, we had really positive results from a sales point of view and at a gross margin level, generating a gross margin of 2.2 million. However, the early investment came at a cost, and that was higher operating expenses, mainly in the form of depreciation, which is non-cash. Overall, this did result in a small retained loss for the period. However, we knew that this early investment would come at a cost, and we were confident that the long-term strategy would pay off. Over the course of our 6 periods in charge, we've obviously refined and reflected the strategy as we see what happens and we listen to market dynamics and we as a management team learn. In the first few periods, we were really going after market share. We kept prices low, we maximised productivity and we tried to really become market leaders and get a real foothold in those markets. At the same time, we pushed forwards with R&D. We, in our own team, developing product Y and partnering with our partnership company to inherit the license for X. However, we realised as we developed as a team and increased the tools in our management toolkit that actually we were probably pricing our products a little too low, as we noticed constantly selling out. And therefore, once we'd built that market share, we really started to then build up our prices, as one, we had higher technology products, and secondly, to get that margin and productivity coming through. As mentioned earlier, a key part of this strategy was partnering with another organisation in order to build on our R&D and development and share the risks and costs. We did that until we got X3 and Y3, but it was really important for us to continue beyond, and therefore we spent an additional 800k to develop or learn the technology for Y4. Through doing all this investment, we also won prizes and grants and got over $1 million back in cash for the investment. And the return on that investment through our sales was significant, therefore making this a double win for the company. As mentioned earlier, our initial strategy was to build market share, and we did that by pricing at a medium or low end of the market. As can be seen from these graphs for X, Standard and Premium, in both cases in the earlier periods our prices were significantly lower. However, in the second half of the six periods that we've been through, we started to aggressively raise these prices. We realised that now we'd built the market share, we'd invested in advertising, we had a loyal customer base, and now was the time when we could bring the prices up to the top end of the market and still maintain our sales level. This next slide shows exactly the same pattern but with our Y products. The slight difference here was by the end we had Y4. We were the market leaders and the only company to be selling Y4 in period 10. That enabled us to set the price and set it aggressively. After paying for market research from our consultants, we realised there was a real premium for this product. And actually, through setting the prices where we did, we made a gross profit of almost 2.5 million already on the 800k investment from the previous period. A real quick win, and that's only after one period, so the future is really bright for that product. However, it would be wrong to say that it was plain sailing all the way through. As this slide shows, we did hit a rocky patch halfway through these last 6 periods, and this was due to unforeseen circumstances where the global supply chain was interrupted by strike and labour issues. Now, although we had insurance in Europe which helped mitigate this cost, we were suffering in Japan and America, and as we said, Japan was a key market for us. So unfortunately, we did hit a speed bump then. However, as you can see, in future periods, we returned to growth, and that was because we stuck to our strategy that we were implementing throughout, as we were confident that that was going to be successful. As we discussed earlier, a key part of our strategy was to make sure we were market leaders in the markets we chose to play in. As you can see on this slide, for product X, we were largely successful in achieving that in Europe and America, both on a units and revenue basis. If we weren't the market leader, we were number 2. In the USA, it was slightly more difficult. This was definitely a problem child for us. However, even in that market, you can see we were still successful and one of the market leaders, and definitely growing in strength as we moved through our succession of periods. As you can see on this slide, that pattern very much followed through for Y as well. Apart from with Y, we were clear market leaders in Europe and Japan. In the US, it was much more of a fragmented market, but we were a big enough player, and given we were the only player with Y4, we were definitely the market leaders at the top end of that market as well. As this slide clearly shows, our strategy to focus on Y was a success for the company. Although there was a similar number of units sold as X, you can see clearly that in revenue terms, Y was a huge hit for the company, and that also translated through to margins. This was particularly due to our building market share, to investing in advertising, and thirdly through the investment in the product itself, and particularly gaining Y4 ahead of our competition. This matrix brings to life some of the key messages that I have been communicating over the last few slides. You can see clearly here that our cash cows, the businesses that are just spinning off cash for you, the shareholders, were Y in Europe and Japan, our focus markets and our focus product. We had some problems in the USA, particularly with X, and that is something that we need to think about going forwards, maybe divesting it or potentially using it to manufacture the product but export it to our other markets where we might have greater demand and greater power. And this slide here clearly shows how our strategy correlated in our final period before this AGM, with exceptional results in all territories, including the USA, where we were struggling, but particularly in Japan, with incredible gross margin. This more than covered the costs. We had a good level of debt, but not too much. Depreciation due to the early investment wasn't increasing, and this resulted in a stellar 3.4 million retained earnings, and that was after we managed to pay 1 million back to you as shareholders in a dividend. This dividend policy is just the start. We believe we can grow dividends going forwards consistently as our strategy continues to reap benefits in the following periods. In terms of the future, we firmly believe that we now have the company established on the right track. Growing profitability, growing revenues, established in our key markets and market leaders in our markets of choice. In terms of recommendations going forwards, we believe that the USA has been a problem market and somewhere where we have to work very hard to make profitability. But the costs of production are reasonable and we already have invested in facilities there. We therefore believe that this should be a feeder market for our successful European and Japanese markets, and therefore should be a production focus with minimal sales but export to our chosen markets. We do need to keep an eye out for any interpolitical arrangements that could put taxes on exports, but for now the climate seems to be improving in that space. For Japan, we believe keep going. We're strong, we're good market presence, and we've been getting huge profitability. And the same in Europe. However, what we do need to be careful of is continuing to invest in R&D. This has been a keystone of our development so far, and particularly with Y. We cannot rest on our laurels. For those that stop, you move backwards. So we need to continue the investment in Y, continue to be the market leaders, and through that strategy, we believe that the company's security and success for the future is looking extremely promising, as will you, as the shareholders, your dividend strain, and also the equity valuation of the company. We thank you very much for listening to this AGM.